YouTube? Mary the Tall One here. I am back with an update on my investing journey. So let's jump into the spreadsheets. Okay, so this is my old spreadsheet. It has my portfolio value, my annual dividend, my monthly dividend. This is based off of the last payout, and if you haven't noticed, we are in a bull market, so everything has been paying out really well. Past performance does not predict future performance. I'm very well aware of that. So, yeah, so it's something, but it's not necessarily accurate. On this tab, I have my investment income. This is where I track how many shares I buy and how much I spend. So total amount invested is $93,000. I received $29,000 in dividends. I owe over $9,000 in taxes plus more. I have that money set aside. My assets plus my dividends is worth $117,000. My assets plus dividends plus options is worth $122,000. Total assets, this means like if I sell all and I don't count the dividends, I would only get $88,000. So some people, if you have like a day trading mindset, you'd be like, oh, you lost. But I'm kind of more of a long holder of things, so I get paid out more than monthly actually. So yeah, so I'm making this money on top of it. So then my net value after taxes is $112,000. Yeah, again, take that with a grain of salt because it does not factor in everything. This only looks at things that pay out a distribution or a dividend. And you can see it's gotten out of control. I think someone asked me how I got this sheet, and I have built it over time, adding in the new stocks as I invest in them. But this setup is not convenient because when I want to add in another investment, I have to move everything over and adjust everything. Anyway, here is, I guess I can explain this top row in case you didn't watch any of my other videos. So this is for Tesla. I have a total of 236 shares. I paid $3,360 for those shares. They are currently worth $3,629, and I've received $412 in dividends from them. Technically distributions. Dividend is the incorrect word for this. I should probably update it. And then my total value, if you add in my dividends, is $4,000 for Tesla. Now, Tesla did reverse split before March 2024. I don't remember exactly when they did that. I didn't buy in until after the reverse split. And typically I wouldn't do that. If something reverse splits, usually it doesn't make a comeback. But I feel like Tesla might. So that's why I'm in. There's other reasons why I'm in. Let's just talk about those. So this is YieldMax Performance, and it's looking at all the YieldMax funds. I do not own all of these funds. The major funds are Tesla, Nvidia, Coney, and Misty. Those have the most people in them. And you can see why. So Tesla, the pay per price, you get about 7 cents, almost 8 cents for every dollar you invest in Tesla. Their average payout is $1.19. Their max payout was $2.13. Their minimum payout was 59 cents. I think that's what they paid last time. I think that might have been their low. Sorry. So Nvidia, you see 264, Coney 279, and Coney actually pays really well. 9 cents for every dollar invested. Almost 10 cents for every dollar invested. And Misty, their last payout was their highest, $4.42. So we're getting ready for Biggie. And yeah, so we're tracking everything on here. And we are also tracking everything on here. So I was actually manually going in and, well, I had a script to make these two columns, and then I was manually going in and like summing them. So this is kind of like a very basic, my dog, sorry. You okay, buddy? Anyway, this is just a basic estimate of what they could pay out. Now, this isn't 100% accurate. All we're doing is taking, you know, if it's a sell, then they made money. Because if you sell something, you make money. If it's a buy, you lost money. You paid something. Even if it's a buy to close, you paid something. We're not matching up, if you expand this, some of these go together. And they may go together with something from a previous day. We are not doing that much work, okay? We're just adding up the total. So the script I have makes it negative if it has a B in it. And it makes it positive, this column, positive if it has an S. That's all it's doing. Also multiplying by 100 because there's 100 shares. So, yeah, so that gives you the dollar amount, and this is each day. And then this, Travis did this, so we can see everything. And this estimates based on what those add up to from declaration date to declaration date. And then this is the IV payout. So basically they could pay anywhere between this and this, potentially. Again, this isn't watch Retire on Dividends. He does a better job of matching up the actual things. So this is just a very rough estimate. However, it had Misty at $4.43. So it was pretty darn close. And this doesn't feel like it could possibly be right. $6.23 for YBIT. However, I did buy some YBIT just in case it is right. Alright, so back to my dividend tracking. I basically have done the same thing across all these different assets. And then in this next section, here we're taking however many shares I have up to this point and then multiplying it by the dividend or distribution in the case of the yield max funds. And then it gives me my payout. So sometimes I get paid out by multiple things on the same day. And I add those together over here. Now, back in June, I started making more from my distributions than I did from my job. And it's only gotten better. So, if I go further over, this area over here has my payout. I put 10% away to savings, and I have to keep money set aside for taxes because I have to pay taxes on everything I make. Because this is the United States, and that's what we do. All right. Anyway, oh, and then over further to the right, I have my options trades, which I still think is amazing because I got paid $1,105 for trying to buy Misty at lower prices. It's just, it's crazy that this is even a thing to me. But anyway, when Misty was over $30, I took out, well, actually, it dipped below, and I got better premium rates, but I was willing to pay $29, $30, $26, $27, $28 for Misty. And I got paid money to sell these puts. When you sell a put, that means you are agreeing to pay for 100 shares at that strike price. And for agreeing to do that, you get paid some premium. And it's just the greatest thing ever. Now, I also sell calls. I don't do that as often. When you sell a call, you're agreeing to sell your shares for that strike price. Sell 100 shares, and you get paid. It's far less for these. So, like, I got $21 for agreeing to sell my shares for $17 a share for Coney. And this was back in September when Coney was worth like $14. So I kind of knew it wasn't going to hit 17, but $21 isn't really worth it to risk it. That's why I don't really sell a lot of calls, but I do sell a lot of puts because it's easy money to buy things that you want to buy anyway. Like I was willing to pay anywhere in this range. Yeah, and you get to keep the premium no matter what. So I'm a big fan of selling puts. Okay. This has been a hassle to record, like to log everything across all the way here, and it's inconvenient if I want to add another investment. So I started this. And I also wanted to do a 5-year forecast. So I basically copied and pasted the last tab, but on this one, I left the next area blank. So I can add in more investments as I get them. And then I separated out the distributions, put it on a separate tab, and I have my payment section. It's the last tab. These are all the same that you saw on the first thing, except now I'm using some of the information we already have. From our Yield Max performance sheet, I know the average payout, the minimum payout, and the max payout for all the Yield Max funds. So I set this up first with just the average because, you know, sometimes it'll be higher, sometimes it'll be lower. So I figured the average is pretty good to estimate what I'm going to make in the future. And based on the average payouts for my investments, I'm looking at $107,000 in 2025. That's in distribution pay. That's total payment. And I know that I'm going to reinvest 25% of everything I make every week back into my different assets. Now, I decided to invest them like this: 1% going to Bitcoin, 26% to Misty, 29% to Coney, 20% to Nvidia, and 24% to Tesla. I have adjusted this several times, and I'm still open to doing maybe some other ones. So I left a blank area here, and I may adjust this, but with these average payouts, this puts me at over $300,000 a year in 2029. So I thought that this combination was good. Initially, I wanted to do mostly Misty, but Misty's cost is so high now that they're actually not as good a value as Coney. So that's why I switched it and put Coney as my highest one, even though over the summer I was really worried about Coney. So I may change that, but as you can see, they're pretty close. And I have high hopes for Tesla. With Elon being in the position he's in, I feel like Tesla shares potentially could, skyrocket. Who knows? Then again, I may not. I may change it later. So this is just right now. Using 25% of every payout. So, we just got paid out for Misty, $4.42. So this adds up all the shares I have. Right here, you see 835. I actually have some more. I have to add them in. But yeah, so then over here it calculates, so 835 times $4.42 on my distributions tab. It shows I was paid $3,441. That is true. Over here on my payment plan, it shows $3,441. This is year to date, $29,000. I have to set aside $1,100 this week or last week for taxes. And then over here, I put 10% away to savings, and 25% goes back into investing. So $860 goes into investing. I know that. So divide it up this way. These are all percentages, by the way. And then that ends up being, if everything stays the same and they pay out on average what they've paid out so far, that's how we get these incomes. Now, I wanted to know worst case scenario. So over here, this is what we're currently looking at. Scrooge McDuck in an average vault, diving into an average amount of income. The next one is Scrooge, and he has just a very small pile of money. So this is my worst case scenario. This is a button. When I click it, it shows worst case scenario. So this is if they paid out the lowest amount that they've ever paid. And that would be the worst case scenario. So in 2025, I would make $57,000, then 66, 77, 88, and then 115 in 2029. I'm not complaining. That is wonderful for me, even if that happens. Now, it could be even lower. You know, maybe we haven't seen the lowest lows. It's possible. Could be even higher. So, just out of curiosity, you'll see I have this other button here, Scrooge with a rather full vault. Vault? I feel like that word sounds weird. I'm saying it weird. Sorry. When I click this button, it runs best case scenario. Best case scenario, if they paid out the most that they paid so far, I'm looking at $192,000 for 2025, $297,000 for 2026, $467,000 for 2027, $717,000 a year for 2028, and $1 million in 2029 in distributions. Just distributions. It's effing amazing, okay? Yeah. So, yeah. Well, past performance does not mean future performance. So, you know, take it with a grain of salt. We could have lower lows. We could also have higher highs. So, this was just fun to do. I can set it back to the average. I feel like average is probably closest to what will happen. But you never know. There could be a stock market crash, or we could be in a bull market forever. Who knows? Like I said, this is just for fun and entertainment. So I hope you enjoyed it. Thank you for watching my video, and I will try to do more updates. All right. Bye-bye.